Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 23rd of January 2021 and we're publishing our gold and silver weekly update for the week ending the 22nd of January. We also briefly look at political events and economic reports which could shape what happens to both the US dollar and therefore precious metal prices. So let's take a look. Firstly, just a quick shout out to some of our latest videos. Bitcoin versus gold and silver episode 7, price to Soar collapse, why 20% of Americans have never had it so good, at least financially, and what Janet Yellen's appointment means for the US dollar and gold and silver prices. And we've placed links to all three of these videos below. Now back to last week's figures. Gold rose $28 from $1,828 to $1,856, having hit a high of $1,875 and a low of $1,814, a rise of 1.5% for the week. In sterling terms, gold finished the week at £1,356, that's up £10, and in euros it closed at €1,524, that's up €11. Silver rose 72 cents, from $24.80 to $25.52, having hit a high of $26.07 and a low of $24.39, a rise of 2.9%, so almost double that in percentage terms, to gold. In sterling terms, silver closed at £18.65, that's up 40 pence, and in euros it closed at €20.96, that's up 0.43 euros. The gold to silver ratio fell from 73.7 to 1 to 72.7 to 1. Bitcoin fell again last week, down $4,511. That's in addition to the previous week's fall of $3,075. And it currently stands at $32,800, though it has been as high as $37,922, that's $37,922, and as low as $28,785 during the course of the week. Now the Dow Jones closed on Friday at 30,996, just below that 31,000 level, down 179 points on the day, but still up on the week, up 182 points. The S&P 500 closed at 3,841, down 11 points on the day, but again up 73 points on the week. And the Nasdaq Composite closed at 13,543, up 12 points on the day and up 545 points on the week. So the Nasdaq, in comparison, seems to have done very well during the past couple of weeks. Brent crude closed at $55.41, up 31 cents, and WTI crude closed at $52.27, down just 9 cents on the week. The dollar index stands at 90.23. Now that's down 0.54 on the week, but still holding marginally above that crucial 90 level. Now, our conclusion price trading range last week stated, quote, all things being equal, we see gold still trading between $1,750 and $1,900, with $1,700 and $1,950 being outliers, and silver trading between $24.50 to $26, with 24 and 27 being outliers. Though if there is a negative splurge, then 23.50 is not out of the question. But if silver did dip to that level, then it's a new ballgame. We suspect, though, that the level of stimulus being proposed should keep silver above $24. Again, this is broadly what happened, with silver momentarily rising above $26, but could not maintain the rise. And as we've stated frequently, the $26 level is quite a strong resistance level, at least for the moment. Gold fell to its week's low of $1,814 early on Monday morning, but recovered and remained above Friday's closing price for the remainder of the week. The difference between highs and lows were just $51, which is below 3%, and so its move could be described as marginally positive consolidation, but broadly range-bound. Gold is now standing near the 50-day moving average of $1,859, which is seen as support, with resistance at $1,939. Short-term momentum is positive, and the medium-term negative momentum, as witnessed last week, is decelerating. The fast stochastic and MACD are pointing broadly towards consolidation, but in, as we term it, a mildly positive way. As we stated last week, gold needs to breach 1900 and hold close to the 1939 level before we can give any form of confidence that the uptrend is back underway. That said, signs are mildly positive. What is perhaps holding gold back a little is that although it rose on news on Biden's inauguration and planned $1.9 trillion stimulus, it was prevented from becoming too excitable, as reports suggested that he may not actually get the full package through Congress. If it were to pass, and many political commentators believe that it will eventually do so, then this should act as an affirmative tailwind for gold. Silver, like gold, opened down initially on Monday morning and then rapidly rose again, operating the whole of the week in positive territory thereafter. The difference between highs and lows was $1.68, or 6%. So there was more movement or oscillation here than with gold. As mentioned earlier, silver is struggling with the $26 resistance level, and until we see a break above here, then trading could potentially be seen as operating broadly between 24 and 27 at a peak, at least for a while. Now the next resistance level for silver is at $25.85 and then $26.30 thereafter, while support is seen at the 50-day EMA of $25.25, then $25, then $24.70 beneath. Now economic data published last week, which did have some effect on prices, particularly because of its effect on the dollar more than anything else, showed a slightly improving initial jobless claims report, falling from 926,000 to 900,000, and the continuing jobless claims falling from 5.18 million to 5.05 million. Housing starts were up from 1.547 million to 1.669 million against expectations of 1.56 million. So that was quite a surprise for the market. And building permits were also high at 1.709 million. A lot of figures today, and we apologise for that. Flash PMIs were positive, with the market manufacturing PMI coming in at 59.1 in January, compared with 57.1 in December, so 2 points higher, and its services PMI coming in at 57.5, compared with 54.8, so 2.7 points higher. Also surprising for many was the rise in existing home sales for December, which stood at 6.76 million, compared with 6.71 million in November, and a 6.55 million expectation. Now looking ahead to this coming week's data, which could have an impact both the dollar and precious metal prices, we can see that on Monday there is nothing scheduled. But on Tuesday we have the FHFA and the S&P Case-Shiller Home Price Index for November and the Consumer Confidence Index for January. So that latter one might be of note. Wednesday, durable goods orders for December, plus core capital goods orders for December, but perhaps even more importantly than those, the FOMC meeting announcement on interest rates, and then Jerome Powell's press conference thereafter. If something of significant importance is actually announced or is covered, we will of course then produce a video on that. Now on Thursday we have the weekly jobless claims report. We also have the gross domestic product for quarter 4 and new home sales and leading economic indicators for December. And then on Friday, so we're having a fair amount of data coming through towards the latter end of the week, we have personal income, consumer spending and core inflation all for December. Employment cost index for quarter 4, and then we have the Chicago PMI and the consumer sentiment index for January. So clearly the figures to watch are Wednesday through Friday, with particular attention dedicated to the FOMC decision and comments thereafter. Now, these next couple of weeks are crucial because they will set the scene to enable us to see the extent of cooperation, or potential cooperation, between the White House and the Congress. A number of Biden's proposed cabinet team have been endorsed and sanctioned, including Janet Yellen, which is important, but the vote on the proposed budget is crucial and also precarious, as even the likes of Mitt Romney have suggested concerns on the extent of it. We suspect that the Fed will continue with its current policy and will leave the Fed funds rate unchanged for now, and we expect to see greater cooperation between the financial secretary and her office and the Fed than perhaps we saw under the Trump administration. So where does this leave us for gold and silver prices next week? Well, in our view, to some extent little changed, with the same level of highs and lows we predicted last week, with perhaps the trading figures being a little higher as far as silver is concerned. So we see gold trading really again between 1750 and 1900, with 1700 and 1950 being outliers. And silver trading, we've upped it slightly between $24.50 really and $26.50, with ultimately $23 and $27.50 being outliers. We still think there'll be some resistance at 26, but if it gets past 26.30, then 26.50 is certainly potentially within the sights there. Now tomorrow we shall be publishing episode 8 of Bitcoin versus Gold and Silver, and we discuss in some depth the recent crash in prices, together with comments made by other quarters as to the viability of this potential current or investment asset. So, what do you think? Where do you see gold and silver prices moving next week? Also the value of the dollar, are we going to see it dip below that quite important 90 level, or are we going to see a further strengthening? Do share your thoughts. And in the interim, thank you so much for listening. If you haven't already done so, please do subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And also a reminder that our Richard and Greg channel, Greg has been offline for 2 weeks, but we shall be reigniting our discussions over the next day or so. Finally, we wish you a safe, enjoyable weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.